also appeared, appeared before the Apex Court of India. Her core competency lies in tax litigation in addition to the company law and insolvency matters. She is currently associated with Sri Kashmiri Lal Goyal Senior Advocate and Sri Sandeep Goyal CA and Advocate. She has written multiple articles and the papers, including GST and the corporative federalism, constitutional challenges of GST, impact of Section 29A on the CIRP and its stakeholders, and implementation of Dharmendra Yamjani judgment on GST leviable on export of intermediary service. Handed over to our indirect tax committee mentor, Rajesh sir, to speak about today's session.
Okay. Good evening, all. Good evening, President Sujata Madam, Chairman Subramanya, and all other committee members. I think this topic, which is selected, is what I can say a hot topic. Because whomever we speak, who is practicing in indirect taxes, they say, "Sir, what is happening for 16.4? Whether there will be some decision of some courts giving a relief, and some cases we understand that there is a stay. What we should do? Whether the officers, whom whatever we say they are not agreeing, we are confirmed to get the order." So like this, various questions on 16.4. I think I have not come across even one consultant or a practicing chartered accountant whom I meet. If we talk about credit, I have not missed. They're asking me a question about 16.4. So that is the importance of the issue which it has created on this. I think Akruti ma'am is there with us to share her experience, knowledge, and the way which we can look at it from the perspective of the participants. I will not spend much time on these things. Probably, I think the mandate, which all the aspects should be covered, is already shared by President to her. I think that is quite comprehensive. We will hear from her, and obviously, if there is something which I can add to wrap up at the end, I'll wrap up, and later on we can take a questions. Okay. Over to you, madam.
Good evening, everybody. I hope I'm audible and visible.
Yeah, you're rightly audible and visible as well. Please go ahead, ma'am.
All right. So good evening to everybody. I firstly would like to thank the Karnataka State Chartered Accountants Association for giving me this platform to actually share and in fact gain a lot of knowledge with regard to 16.4, because the kind of experience that chartered accountants have in practical aspect of filing returns, in practical aspect of how to actually deal with the officers and the problems that they're facing, helps advocates in putting forth the point before the judges, who are ultimately the decider, who ultimately decide how to take ahead this issue. So for today's session, which is section 16.4, I will be dealing with the historical background as to how the previous regime judgments are relevant even in the 16.4 context with regard to the nature of ITC and whether or not ITC can actually be withheld with regard to a provision which is such that is under 16.4. Then coming to what kind of decisions have actually come forth before the practicing advocates in terms of section 16.4. So far, there are two decisions that have gained a lot of limelight. One from Andhra Pradesh High Court and the another one from Bihar High Court, from Patna High Court. Then I'll be coming to how this issue can still be tackled and how this issue can still be kept alive, and a possible outcome can come, a possible solution can come for the taxpayers. That being said, I will start with the first leg of today's presentation with regard to how ITC is understood in terms of GST and in terms of the previous regimes. So if my screen is visible, I will go ahead and describe what exactly input tax credit or input tax is under the GST Act. Section 2, subsection 62 of the CGST Act defines what is an input tax. Input tax in relation to a registered person means a central tax state tax, integrated tax, or UT/GST tax charged on any supply of goods or services or both made to him, and includes the definition of input tax itself includes integrated IGST, tax paid under RCM, tax paid under CGST, SGST, and UT/GST. The only exclusion that has been made from the very definition of input tax is the input tax paid under composition levy and nothing else. Input tax credit, in terms of the definition of input tax, means the credit of this input tax. So the essential idea behind CGST is that whatever value you are adding to the product, only that amount of outward tax is something that you ought to pay. The main aim being to remove the cascading effect of taxation that we saw in the previous regime, because central excise, VAT credit was not something that was set up against VAT, and of course CST and all also played a primary role. So the nature of input tax credit has been discussed by the Honorable Supreme Court in the case of JM and Company, which is a 2016 judgment. This 2016 judgment, in its paragraph number 11, while taking note of the Karnataka VAT Act under section 19, defined the significant aspects that came as to ITC. As per the Supreme Court, section 19 gave the following significant aspects. The first being that ITC is a form of a concession provided by the legislature, and it is not admissible to all kind of sales, and certain specified sales are specifically excluded. So the very first thing that the Supreme Court said, that ITC is a concession. The concession of ITC is available on certain conditions mentioned in this section, which brings us to the fact that ITC is a conditional concession. The third thing that the Supreme Court noted was that one of the most important conditions is that in order to enable the dealer to claim ITC, it has to produce original tax invoices, complete in all respects, evidencing the amount of ITC, which means that the third aspect that the Supreme Court noted to be essential to ITC is that you should have the evidence of the amount of ITC. So far, we can see that in terms of section 16.4, we are all good as to all three aspects. It is a concession, it has to be conditional, and we have the original tax invoices. As per the Supreme Court, it further noted that it is the right of law that whenever a concession is given, this conditional concession that is being given in term of ITC by the statute or notification, the condition has to be strictly complied with in order to avail such concessions. Thus, it is not the right of the dealers to get the benefit of ITC, but it is a concession granted by virtue of section 19. So, with this, we come to a conclusion so far that ITC is not a right. It is a conditional concession which is available to you on the production of evidence of input tax. This judgment would hold relevance even in terms of our solution, I must add, and I will come back to this judgment of how this is the judgment only which will help us to come out of this loop of section 16.4. Following this judgment in 2019, the Supreme Court noted in the case of ADL Automotive versus CTO that the time limit condition, which is akin to section 16.4 in our case, is also a valid restriction in the light of this judgment of JM and Company. With keeping in mind these two judgments, I come to the second aspect of today's presentation, which is how these judgments are being incorporated in the present taxation regime of GST. Coming to the first judgment of the Andhra Pradesh High Court, Thirumala Konda Plywood versus Assistant Commissioner State Tax, the prayer in this particular petition was that 16.4 should be declared violative of Article 14, Article 19(1)(g) and Article 300A. Just to give a background, Article 14 talks about right to equality, Article 19(1)(g) talks about freedom of business, and Article 300A talks about right to property. The second prayer in this particular petition was that 16.2 should have an overriding effect on section 16 subsection 4. If we come to section 16 subsection 2 itself, it states that notwithstanding anything contained in this section, no registered person shall be entitled to claim credit of any input tax in respect of any supply of goods or services unless he fulfills these conditions. The argument of the petitioner in this particular case was that because 16.2 is an overriding provision, even if you do not fulfill the conditions of section 16.4, 16.2 should be given a priority. And as long as those conditions are fulfilled, you should be able to attain your ITC. You should be able to claim your ITC even if your return has not been filed within time. The third prayer was to declare the notification dated 11th of September 2020 issued by the Andhra Pradesh government violative of Article 14. So this notification itself doesn't hold good value in the present discussion. So the facts of this case was that the petitioner was received was in receipt of a show cause notice under Article 74, raising a demand contending that the petitioner has availed incorrect ITC to the tune of 4 lakh and proposed interest and penalty thereon, coming a total of 11 lakh. The ITC claimed in violation of Section 16.4. The demand was also confirmed by an order dated 4/3/2022, which means that the petitioner had come right after the stage of DRC 07 without availing its alternative remedy. Section 16 has been put forth here, which I already showed you as per my other decision. So, coming to the decision of the court, taking note of the two major judgments of JM and Company and ADL Automotive as discussed by me previously, the court noted that the ITC that can be availed is in the nature of a concession, rebate, benefit, but not a statutory or constitutional right. Because it is a concession, therefore imposing condition, including time limitation for availing said concession would not amount to violation of fundamental rights. Taking a note of the fact that in ADL Automotive, the condition as to prescription of time was expressly taken into consideration by the Supreme Court, the Andhra Pradesh High Court followed the judgment of the Supreme Court, saying that yes, it is in the nature of ITC is merely a concession, and even a condition of time limit can be prescribed. The second leg of the argument, which dealt with Section 16.2 being a non-obstinate clause or being a notwithstanding condition, the Andhra Pradesh High Court noted that the provision of non-obstinate clause taking a precedent over general provisions come only when there is a contradiction between the two. When there is a harmonious reading that can be done of Section 16.2 and Section 16.4, implying that both of these conditions can exist together, there is no need to go into the notwithstanding clause, and it was held that even if the assessee passes the basic eligibility criteria of Section 16.2, still he will not be entitled to ITC if his case falls within the limitation of 16.3 or Section 16.4. As per Section 16.4, the assessee shall not be entitled to take ITC in respect of the invoice, debit note, or the supply of goods or services or both after due date of furnishing of return under Section 13.9 for the month of September for the following the end of financial year to which such invoices or debit note pertain. If any assessee fails to furnish the return within the time, he will not be entitled. That was the declaration of the Andhra Pradesh High Court in terms of this argument as well. Lastly, taking into account that even if the return has been accepted with late fees, it would not exonerate the taxpayer from the condition of for Section 16 subsection 4, which means even if you have filed your return late, you have paid penalty, you have paid interest, whatever fine they wanted to impose, even then you will not be entitled to ITC because the condition of Section 16.4 has not been met. This judgment was followed by the Patna High Court judgment in the case of Gobind. In this particular case, there were three major arguments that were laid down. First, that the condition of 16.4 is in violation of Article 14 and Article 300A of the Constitution. Alternatively, the petitioner sought a prayer that Section 16.4 is a merely procedural condition, and it cannot override the substantive conditions of Section 16.1 and 16.2, which is the same argument that was raised before the Honorable Andhra Pradesh High Court in the case of Thirumala Konda Plywood versus Assistant Commissioner. The third argument that was laid was that 3B should not be treated as a return prescribed under Section 39A of the CGST Act, as it does not satisfy the parameters of a return. Even though this argument was put forth and has been mentioned in the judgment, it was not elaborated upon. Therefore, with regard to this particular argument, the judgment of the Patna High Court is still per incurium, which means that this was not taken into account. Given all of these arguments, the Patna High Court, after taking into account our section 16.4, noted that section 16.4 cannot be read down, and it has also held that, if I may show that particular paragraph, yes, the Patna High Court noted that ITC is not unconditional, and a registered person becomes entitled to ITC only if the requisite conditions stipulated therein are fulfilled, and the restrictions contemplated under subsection 2 of section 16 do not apply. The right of a registered person to take ITC under subsection 1 of section 16 becomes a vested right only if the conditions are fulfilled, free of restrictions prescribed under subsection 2 thereof, which means that all the conditions of the three subsections barring section 16.1, yani ki 16.2, 16.3, 16.4, all these three conditions have to be met simultaneously. Coming to the argument of Article 300A, which means the right to property of ITC, the Patna High Court noted that section 16.4 is merely one of the conditions which make the registered person ITC, makes entitled to the registered person for ITC, and by no means subsection 4 can be said to be violative of Article 300A, which closes down our two major arguments that Article 3, it is not in violation of Article 300A. Second, that even if there is a non-abstinent clause under in section 16.2, it will not override the provision of section 16 subsection 4, them not being in contradictory to each other. With this background in mind, they also said that the fiscal legislation having a uniform application to all registered persons would not be in violation of Article 19(1)(g), that is freedom of business, being that these are applicable to all the registered taxpayers uniformly and not giving any one taxpayer an advantage over the other, causing the other one to hamper his business. With these three subsections in mind, now I will come to what kind of solution that is being placed, what kind of arguments are now left, what questions are left open to us in the light of these judgments. Coming firstly to the background of this issue of GST R3B not being a proper return. If we do a reading of their language of section 16 subsection 4, it states that a registered person shall not be entitled to take ITC in respect of any invoice or debit note for supply of goods or services or both after due date of furnishing return under section 39 for the month of September. Now, our solution to this problem lies in furnishing of return under section 39 for the month of September. The argument that was not referred to by the Patna High Court with regard to GSTR 3B not being a proper and prescribed return under section 39 is the one which is still open for us, and something that is being argued before not only Punjab and Haryana High Court but even other high courts. This issue was at first dealt with in Aap and Company by the Honorable Gujarat High Court, in which they said that GSTR 3B was merely a stopgap arrangement and it cannot be compared to GSTR 3 as was originally envisaged in the CGST structure. This judgment was overruled by the Supreme Court in the case of Union of India versus Bharti Airtel. However, even the Supreme Court, while dealing with this judgment, left one aspect for us that has been left open. If you take note of paragraph number 39 of the Union of India versus Bharti Airtel judgment, the Supreme Court said that the validity of the amendment that makes GSTR 3B a retrospective return in place of GSTR 3 has not been put to question before the Supreme Court. If we come to the bare language of section of Rule 61, we see that Rule 61 prescribes the correct return that has to be filed under section 39. Section 39 prescribing a monthly return. When the original scheme of GST came, it said that the inward supply has to be in GST1, the outward supply has to be in GSTR2, the outward supply has to be in GSTR1, the inward supply has to be in GSTR2, and the consolidated GSTR3 has to be filed at the end of the month, which is being 20th the due date. This GSTR3 was not brought into force. due to which ultimately GSTR 3B was brought as a stopgap arrangement. However, this GSTR 3B replaced GSTR 3 by virtue of a retrospective amendment to Rule 61.5 proviso. This proviso, as highlighted in green on the screen, says that provided that a person that where a return in GSTR 3B is required to be furnished by a person referred to in Rule 1, then such person shall not be required to furnish return in form GSTR 3, which means that now, by virtue of this amendment dated 9th of October 2019, GSTR 3B had been made a permanent return in place of GSTR 3, as the person who has filed 3B need not file GSTR 3. This rule has further now been amended with effect from 1st of January 2021, wherein GSTR 3 has absolutely been removed from the circulation. Coming back to Union of India versus Bharti Airtel, the Supreme Court noted that this retrospective amendment has not been put in question before us. Talking about App and Company Chartered Accountants versus Union of India, the Supreme Court noted that GSTR that at the outset that the concerned writ petition has been ended in fructus, but went on to answer. The Supreme Court disagreed with the view taken by the Gujarat High Court and said, in our view, our view stands reinforced by the subsequent amendment to Rule 61.5, which is the proviso, restating and clarifying the position that where the return in form GSTR 3B has been furnished by the registered person, he shall not be required to furnish the return in form GSTR 3. This amendment was notified and came into effect from 1st of July 2017, which is from the very inception of the GST. The validity of this amendment has not been put into issue. Since the validity of this particular amendment was not put into issue, the validity of this amendment has not been discussed by any High Court so far in their judgment. The question of GSTR 3B being a correct return in place of GSTR 3 still remains open to us. If I try to formulate my argument with which we are before the Honorable Punjab and Haryana High Court in multiple writ petitions, wherein we have also been able to take stay in the meanwhile, I will compare what GSTR 3 was and what GSTR 3B was. Before coming to that, let us see what is the section that prescribes the return, the monthly return, which is section 39. As per section 39, every registered person for every calendar month or part thereof furnish a return electronically of inward and outward supplies of goods. So the first aspect that there has to be in the return is your inward supply and your outward supply. The second aspect is the ITC availed, third, tax payable, fourth, tax paid, and such other particulars as may be prescribed. This return was originally prescribed in GSTR 3 has now been shifted to GSTR 3B by virtue of Rule 61. As per Rule 61, every registered person shall furnish a return in form GSTR 3B through electronically through common portal, directly or through facilitation center. If we compare the present 3B with GSTR 3, I hope my screen is visible in terms of GSTR 3 and 3B. If we draw a comparison.
No, only the text is being visible. Form is not being visible.
I will. I hope my forms are now visible.
Yes, it's visible.
All right. So let's compare whether GSTR 3B can actually be said to be a replacement of GSTR 3, which was the original return that was supposed to be there. At the outset, the part A of GSTR 3 was supposed to be auto-populated from your GSTR 1 and your GSTR 2. The details as to your turnover, details as to your outward supply, your intrastate supply, your tax effect of amendments, everything was to be auto-populated with regard to GSTR 3. However, there is no such option in GSTR 3B. As we were discussing that there were certain essentials prescribed under Section 39 as to what all is to be included in a return. This included outward supply as well as inward supply. If we come to 3B, we see that there is a detailed discussion as to the outward supplies. Outward supplies in terms of outward taxable supply other than zero rated supply, outward taxable supply, zero rated supply, other outward supply, and non-GST outward supply. However, the only aspect of inward supplies that has been included is in terms of reverse charge, which means that one of the essentials of GSTR 3 of our monthly return as prescribed under Section 39 has not been included in GSTR 3B. That is, we are not able to deduce from this return the details of our inward supplies. If we compare this with our GSTR 3, we can see that there is proper details of inward supply payable under reverse charge as well as with regard to input tax and intrastate supply, net supply for the month. Interstate supplies, net supplies for the month. All of these things have been auto-populated and included in GSTR 3. Next, we come to see with regard to eligible ITC. GSTR 3B prescribes only as to what will be your eligible ITC and tells you to file the returns accordingly as per your self-assessment. Whereas in paragraph number 6, in table number 6 of GSTR 3, the entire details of ITC on inward supplies was given in detail with bifurcation as to input service, capital goods, and also gave you an option to discuss in detail as to what were the inward supply on account of amendments made there. The next thing, if we come to, is point number 11 and point number 12 in terms of GSTR 3 as GSTR 3 filing was explained. GSTR 3 filed without discharging complete liability will not be treated as a valid return, which means that even if we do not fill the complete and exact return details in GSTR 3, we can still file the return, yes, but it might not be treated as a valid return. Filing option always remained with us in terms of incomplete GSTR 3. If we see point number 12 of the same explanation, we can see that if the taxpayer has filed a return which was not valid earlier and later on he intends to discharge the remaining liability, he has to file the refile the part B of GSTR 3 again, which means that GSTR 3 also gave us an option to file an incomplete return for the meanwhile and then refile it in terms of part B of GSTR 3, wherein we can make an amendment to the previous returns as well. These columns were specifically provided for in GSTR 3, wherein we could see the tax effect of amendment that was made in terms of outward supply. We can see the tax amendment in terms of GST reverse charge. Addition and reduction of amount of output tax or mismatch and other reasons was also given to us in GSTR 3. Other than that, GSTR 3 also gave us an option to claim a refund from electronic cash ledger within the GSTR 3. However, this option is not available in GSTR 3B. Therefore, it is very evident that many important aspects of GSTR 3 have not been incorporated in GSTR 3B, which makes it an incomplete return. Since this return is incomplete in terms of Section 39 and in terms of refund provisions as existed before the retrospective amendment, GSTR 3B cannot be made a valid return in place of GSTR 3 with a retrospective effect, overriding the provisions of the Act itself, because forms and rules always have to be in consonance with the parent Act. This is where our judgment in the case of Jayam and Company becomes relevant once again. If we come to Jayam and Company, we see that in terms of retrospective amendment to fiscal statutes, the Supreme Court gave a very interesting observation. They said that the following principles and tests must be kept in mind while making any provision retrospectively. The first was that the law cannot be held to be unreasonable merely because it operates retrospectively, which means that there is a power of retrospective amendment. The second is the unreasonability must lie in some other additional factors. Only because it is retrospective doesn't mean it becomes unreasonable automatically. The third aspect was that the retrospective operation of a fiscal statute would have to be found to be unduly oppressive and confiscatory before it can be held to be unreasonable as to violative of constitutional norms. When we look at these words, unduly oppressive, confiscatory, this is where our section 16.4 comes into play. For a person who has paid tax, for a person to his supplier, mere a time constriction of a return that was not even valid for that period of 17, 18, 18, 19, can that be used to levy fines, levy penalties, and levy tax demand upon the taxpayer right now at present? Therefore, this retrospective amendment of Rule 61, Sub-Rule 5, Proviso is unduly oppressive and confiscatory to the taxpayer. The fourth observation that was made was whether taxing statute is plainly discriminatory or provides no procedural machinery for assessment and levy of tax, or that is confiscatory, courts will be justified in striking down the impugned statute as unconstitutional. Therefore, where the retrospective amendment leads to confiscation, leads to confiscatory nature of goods, assessment and levy of tax is discriminatory. In these conditions, the retrospective amendment can be struck down. The other factors being period of retrospectivity and degree of unforeseen and unforeseeable financial burden imposed for the past periods also have to be kept in mind. Length of time by itself is not a decisive aspect of retrospectivity. So if this audience is with me right now, what I'm trying to state is that Rule 61 prescribed GSTR 3 to be GSTR 3 to be a valid return. GSTR 3 was replaced by GSTR 3B by way of a retrospective amendment in 2019. By this time, we were already 2 years into GST regime. GSTR 3 and GSTR 3B are not consistent with each other. GSTR 3B is not consistent with Section 39, which prescribes what kind of return has to be filed. This retrospective amendment, in light of all of these aspects, imposes a penalty upon the taxpayer who have not filed GSTR 3B, which is not a valid return, at a due time as per Section 16.4. If we go by this argument, we can see that this retrospective amendment, when itself questioned, can still bring a favorable outcome for the taxpayers in this litigation that is going on in terms of Section 16.4. However, the only alternative that is left with the taxpayer currently is that even after the order, they must approach the High Court under a writ petition challenging the constitutional value of Rule 61.5 Proviso itself. The retrospective amendment making GSTR 3B a valid return in place of GSTR 3. This is more so because even the Supreme Court in the case of Union of India versus Bharti Airtel did not go into the question of the notification and the retrospectivity, which is evident from the paragraph that I showed you earlier, which were our paragraph number 39 and 41 of the said judgment in which App and Company was dealt with. The validity of the amendment was not put into the issue, and therefore this issue is still left alive before the High Court as well as the Supreme Court. Saying that if there are any more questions, something that can be dealt with otherwise. In terms of amnesty scheme, if I may say, it is a possibility that now the election time is coming. Some sort of amnesty scheme comes, as we've seen in the past, for application for cancellation of registration, revocation of cancellation of registration. All of these might come. But for now, since these amnesty schemes, even though are being talked about, but nothing has come other than mismatch of GSTR 2B and 2 and 3B, we have to see the entire burden cannot be left upon that whether an amnesty scheme with regard to filing of 16.4, violation of 16.4 would come into picture or not. There is a possibility, yes. We have also seen that the Supreme Court, in terms of Tran 1 issue, has come to the help of the assessee, providing an extended period to file their Tran 1. So hopefully, given the quantum of this litigation that is coming, and given the fact that a lot of taxpayers are facing this problem, I'm sure either the government or the Supreme Court, through litigation, will come to a favorable outcome to the help of taxpayers in terms of this time limit. However, the only alternative right now is indeed to challenge the retrospective amendment that has been made to Rule 61. If there are some questions from the audience, something that can be addressed.
I think there has been no straightaway questions. It's only that they're asking the presentation can be shared on the other than that.
Yes,
That,
for sure.
yeah.
I'll share it with the ma'am and Rajesh sir if that's okay.
There's one question which is from Shrikant Acharya. Subbu, you will take these questions to the panelists, or how do we do it?
Rajesh sir, I will take the question.
Okay. So you can just ask the questions. Okay.
Ma'am, he's asking if input tax credit is concessional as per GST law, then can GST law remove the concept of input tax credit concept without changing the rate of output tax under GST law? If yes, then how ITC credit concept can be removed?
If you may repeat the question.
If the input tax credit is concessional as per GST law,
Yes.
can GST law remove the concept of input tax credit concept without changing the rate of output tax under GST law? If yes, then how ITC credit concept?
Yes. So coming to the first aspect of this question, that since ITC is a concessional right and not a concessional concession given by the government, the term in terms of concession, it means that it has to be made conditional, that all the conditions as to ITC has to be fulfilled. So if they remove the concept of ITC altogether, the system of CGST cannot work. There is a mechanism in place. These conditions themselves have been placed for the purpose of this mechanism, to make it more time efficient, to make it viable. This entire ITC procedure and value added system, to make it more viable, the concept of ITC has been introduced. If the concept of ITC is removed in itself, then this issue, then the system of CGST cannot work altogether. So removal of ITC is something that is, I believe, out of question for now. Coming to the second aspect of it, that if the output tax rate is decreased and the input tax that we've claimed is more, can there be an issue of ITC in terms of what can be done, is the question, if I'm correct. So if we take an example to this, if I buy, let's say, a product which is taxable at the rate of 12, the inputs for which are taxable at the rate of 12%. When I bought these products, the output tax that I had to pay was at the rate of 18%. This would have helped me cross out my 12% ITC. However, subsequently, the government changes the rate to, let's say, 5% or 12%. Now, to the best of my belief, I will come under the inverted duty structure in terms of input tax and output tax. So I can claim a refund of that ITC.
Next question, almost same, but quite changes is there. Whether fixing time limit for claiming ITC without fixing any time limit for output tax, is it valid or not?
When it comes to different provisions, a harmonious reading has to be given to the entire procedure. So when there is a limit for your output tax and your GST or 3B, you have to see that GST or 3B which would come at what stage and which will have to be filed before the other one. So the time limit with that regard have to be adhered to in complete consonance with each other.
Continuing that, whether allowing ITC, will there be any loss of revenue to the government as such ITC was paid by the person who will be claiming credit?
Not at all. There is no loss to the government in this. It is a very completely revenue neutral position, that the government allows the ITC to the person who has actually paid the tax to his selling dealer at the time of purchase. And therefore, yes, there is no loss to revenue as such.
If claiming ITC is not a right under GST law and it is mere benefit concession, then what was the object of implementing tax regime for single point tax to the multi-point of tax with the set of ITC at all the stage before final?
Before the These are very interesting policy questions as such. But if we see the entire mechanism of ITC and single point taxation system, the issue is that the government, like, to be fair, the government also cannot give them an infinite time to claim ITC, because this entire chain has to go in consonance with each other. Because there was also this matching concept that was there in GST earlier, if we remember section 42, that once the person will file his GSTR1, it will be reflected in his statement, which will be modified, accepted in GSTR2, as per which he will file his GSTR3. If the person is not, one person from the chain is not filing his returns within time, this will impact the entire chain and the information that is getting to the government. The purpose, as per me, of making ITC time barred or making sure that the taxpayer is actually filing his returns within time was to ensure the smoothness of the system altogether. This condition, as such, as per me, is relevant in terms of time. But yes, there has to be some sort of flexibility. There has to be some sort of concession given to be given in genuine cases. In these cases, unfortunately, the only remedy that remains with us is through writ petitions. Even even amendment of GSTR1 is being taken cognizance of, and multiple cases have come from a lot of high courts stating that the permission to amend GSTR1 should be given to the people, even if the time limit for amending to GSTR1 has gone by. Deepak Printing is the one case that comes to my mind right top of my head, and given by the Gujarat High Court, against which then SLP on the Supreme Court has also been dismissed. So this issue will have to be taken, if not on policy level, but it will have to be taken in through litigation only.
Next question, ma'am. It is on date. For financial 18-19 return filed on 21/10/2019, as
Yes.
20th/10/2019 was Sunday.
Again, this brings me back to the fact that these case-to-case basis of genuine hardships will have to be taken by the Supreme Court, because will have to be taken by the High Court and jurisdiction, because the officer with in front of who has issued us the show cause notice, even he is not empowered to go beyond the letter of law. The spirit of law is something that can be imposed only by the High Courts and the Supreme Court.
Yeah, ma'am. Next, section 16(4) prescribes due date of September or annual return, whichever is earlier. Normally, annual return due date lies in December. So, is there any drafting issue in this point? He's asking.
That is there, but to my understanding, the reason for making it whichever is earlier was that sometimes the date of filing return is extended for the month. The monthly returns date is extended. So it may be a situation where the date is extended beyond the date of final return, beyond the date of GSTR 9. So in that aspect also, both of them, which one is earlier, is kept the main point of time limit.
Thank you, ma'am. Another one. In Airtel case, Supreme Court also discussed about books of accounts being primary source of information rather than return. Can we use the same as defense?
So in the Airtel case, if we look at the principle of self-assessment, which was enforced by the Supreme Court, that ultimately it is the books of return, because the argument that was taken by Bharti Airtel at the time was that GSTR 3B was not available when they filed their returns. They had filed all of their returns as per their own understanding and paid tax in cash. So what the Supreme Court wanted to say with regard to books of accounts being the primary source of information was whether or not a certain amount of ITC is available to you has to be assessed by yourself in terms of the books of accounts. In that terms, they could not take the defense. Bharti Airtel could not take the defense that because the mechanism was not available in terms of GSTR 3B at that time, they were under a misconception and they were not able to calculate as to what amount of ITC was available to them, and they had all made the payments in cash. In that terms, yes, Bharti Airtel's argument was rejected by the court in terms of self-assessment. But in terms of section 16(4), The primary source of information being books of accounts cannot be taken help of in terms of these litigations.
Another one question is there any case pending before Supreme Court currently on this matter?
Not before the Supreme Court, but before the High Courts, yes. Before the Himachal Pradesh High Court, we have filed multiple petitions before the Punjab and Haryana High Court. We are awaiting decisions on that. Pleadings are complete, and hopefully the matter will be taken up very soon for final argument. So let's hope for a positive outcome.
As of now, the questions are almost done. So now you can continue the presentation.
Yeah, I think I'd like to just add a little different perception with whatever Akutim. It was a wonderful presentation. I should thank you, ma'am. And actually, participants, the flow with which you went through was very helpful for the participants to understand how it has to be looked into. I think we need to first understand, as Akuti madam also was mentioning, the way the law was structured when Section 16(4) was drafted. If you see, as to right, credit will become a right, absolute right, once you have fulfilled a condition. It will not become your right until you fulfill a condition. That was clearly explained by madam. Because in that context, this is treated as a concession, not in the context of government. I mean, the legislature can remove it. That's a policy decision. And coming to the one more aspect of putting this cutoff date, somebody asked 16(4) vis-a-vis annual due date, whichever, whether there's a drafting. See, this GST was designed basically to enable the way it has to work so that the government should get their revenue shares between center and state. That issue of a computation cannot be kept open. That is what the way they looked at it. In fact, the payment of tax was not linked for the purpose of filing return. That is what was very clearly highlighted by Akruti madam by showing us the returns. In fact, if you refer to section 75(12) also makes it clear that somebody could file a return even without payment of tax. That is when the recovery things will come into picture. So why? That's why they said put up a cutoff date so that the credit lodged has become final from the taxpayer perspective, so that their settlement of accounts between the states can be worked out. So that was the objective with which 16(4) was drafted, to enable the conclusive figures to be arrived from the government perspective to determine what is the credits of the taxpayers in the India, so that they can settle their accounts. That acts as a limitation for the taxpayers to claim a credit. See, this limitation is very, very strong concept. Though it's a procedural in nature, but it can take away their rights. So here, this 16(4) has to be looked at from the perspective of a limitation. Now, it clearly says the credit shall be taken. How do we take? Again, 16(2) says you shall file your return. So it is automatically 16(4) and 16(2) is linked, where we claim our credit to return, and that is where the 3 was enabled to file your return even without payment of tax. So you could have lodged your credit. So take a situation, in fact, in order to crease out all these things, amendment after amendment is coming out as a curative, with to say that that 50 subsection interest will be only on net cash. All those things are coming. That was not all, but might have been required. If the 3 was enabled, I could have paid my additional duties later. All those could have been sorted out. But all this problem is essentially because 3B is replacing 3. I think that was well presented by Akuti madam for us, our knowledge. So if you look at that from that perspective, the problem got created because of the substitution of 3 in place of 3B in place of 3. I think we look at it that perspective. I think we'll get answers to many of the questions which are raised. I think in that direction, probably we also are expecting that there will be a discussion which is likely to happen in this meeting. Somebody was telling me that there's a possibility of that matter coming up in this upcoming council meeting as well. And madam also did mention that the amnesty scheme, or somebody was mentioning instead of amnesty scheme, there will be a clarification to that effect, something like. But whatever it is, ultimately 16.4 matters. I think we are all hoping that we will all should get a relief in one way or other way. And again, it should not be again while giving a relief, they again hold back some conditions and give that. That is what we can, we should be. I think that's all I want to just add from my perspective. Over to you, ma'am, to supplement further points. Anything on that?
Would definitely agree with Rajesh sir, especially in terms of this last comment that whatever relief comes, that is also going to come conditionally. Even after the Philco judgments, we've seen that another branch of litigation is coming up where Tran 1 credit is being denied once again by the assessing officers. There's no way to appeal. Now they've allowed manual appeal. The structure, the policy, that never goes away. But yes, there is a possibility. I would agree with Rajesh sir 100% that some sort of amnesty scheme is expected in GST Council meeting, because this is a litigation. Number one, there is no revenue loss. Number two, this is a litigation that is coming up very frequently because these kind of problems have come up since GST was a novice system at that time as well. People were confused as to how it is to be filed, how it is not to be filed. Plus, you've given them an option that once GSTR 3 will come, then you introduce GSTR 3B, then you make it retrospective. All of these problems have subsisted on the part of the government. So, since these issues have been brought forward, I'm very sure that something of the other amnesty scheme should also come in this regard.
I think one question which many people are asking, and also in the topic, is uh, how practically the participants, I mean, or the taxpayers, or the consultants, or the chartered accountants should handle these things. How in various stages, whether it's a merely nascent intent stage, or it's in show cause notice stage, or it's in the first appeal stage, or it is already appeals, first appeal that already decided. How to handle that is one more important questions which the participants would like to know. Can just throw some light on those things.
So there are different stages of litigation that are coming up. There's show cause notice, then there's the appeal against the first order. Second appeal cannot be made because GST tribunal is not being constituted. So at the first stage of the show cause notice itself, the problem is that even to be fair, the officer who is assessing your case is bound by the law. Since he is also bound by the law in letter, we have to bring forth before him the law in spirit. The timeline that I explained to in this using this platform is something that will come in handy for preparing a reply to the show cause notice as well. Bringing forth the genuine problem before the officers as well is something that can help us even at the nascent stage. But something that we should prepare our taxpayers and our clients, for that matter, in terms of these kind of show cause notices, is that they should be mentally prepared that there will be a negative order, because the assessing officer does not have a power to go beyond the law. The second thing is that whenever an appeal has to be filed, there will have to be payment of 25% of pre-deposit of the tax demand. 10% of the pre-deposit of the tax demand. So these two things should be disclosed to the client outrightly. The issues with regard to the constitutionality, with regard to the fact that there were genuine problems of the assessee factually, have to be brought at the first stage itself. So whenever we are preparing a reply to the show cause notice, the first thing that we have to tell for sure is that this was the factual aspect due to which a return could not be filed in time. This is one thing that always helps to persuade courts on the higher level as well as to what kind of genuine situations can arise where Section 16(4)'s constraints should not be looked into. With regard to the legal aspect, the assessing officer, at the risk of repetition, the assessing officer is bound by the letter and law. The only thing that we can do is show them the law in spirit as to what was the aim of GST and how all of these things, cumulatively, the amendments and all have made an impression and has made an effect due to which these notices are indispensable with. In appeal as well, these grounds will be taken. Then thereafter, again, you also have to go to High Court itself because GST tribunal is not there. Punjab and Haryana has so far been admitting such writ petitions which are coming because of the GST tribunal not being constituted. So these are a few things that can be taken into account. But yes, being upfront with the client will always help to get them mentally prepared that this kind of thing is going to happen. Because if someone can disagree with me, because your assessing officer is bound by this 16(4), he has no other option but to impose a penalty, fine, and raise a demand of ITC, raise a demand of tax in case of an issue.
In other words, I can say that, we have to keep the case alive. We should not allow it to die by not filing appeal,
Yes.
so that, the remedy, whenever it comes up, the benefit of that can be taken.
Definitely. If we look at the schemes that have come in the past, also, one of the conditions in the schemes have also been that there should be some alive litigation, may it be a writ petition, may it be an appeal, may it be just a show cause notice. Something has to be alive in that situation for you to be eligible for an amnesty scheme itself.
And generally, when this amnesty scheme comes, somebody who has deposited already will lose it, and only people who have not deposited will gain. Because generally, any of these schemes comes, or the clarification said whatever you have paid, you can't claim refund, but they will not ask you to pay. Especially in this latest two council meeting, they're using the word as is basis,
Yes.
as is basis. So still to get, I think so. That is one thing which we the all the participants and their clients should be aware of. I think any a couple of questions got added later. If you want to add up that, and I think we can proceed.
Yes, sir. Continuing the question, ma'am, through Airtel case, there are two concepts: input tax credit register and electronic credit register by GSTR 3B ITC transfer to ECL. Since I have availed credit in time, but it is just by GSTR 3B ITC to ECL.
So this concept of our admissible ITC, our eligible ITC, all of these things have been used very frequently in the Act. So the ITC that gets transferred in our electronic credit ledger is the ITC that, according to us, is something that we have gained. But whether or not this ITC is admissible to us, whether or not this ITC can be used to set off our liability, is something that has to be determined by us at the time of our stage when we are filing the return. We have to see if some amount of ITC that has reflected in our electronic credit ledger has to be reversed. We have to see whether or not it is, for example, it is a block credit under Section 17, and only after making such assessment we file our GSTR 3B, wherein we say this amount is eligible ITC and this is the admissible ITC we are using to set off our output tax liability. Therefore, filing of GSTR 3B and the credit being in our electronic credit ledger are two very different things, as per me, and they have to be dealt with accordingly. Both the ledger and the return have their purpose, and the purpose of the return cannot be fulfilled by the purpose of by the ledger itself.
Thank you, ma'am. When there is no transparency with purchaser to check whether supplier is genuine for life, are the conditions mentioned for ITC right or reasonable?
This is another very interesting question that will lead to another discussion altogether, with regard to the
Probably we'll
kind
be
of.
taking it up in a couple of sessions
Yes,
later.
I'm sure. GSTR 2, sorry, Section 16 to C will be something that can be played with the on-quiz judgment. In fact, for this particular question, I will refer you to a judgment by the name of Farhan Ferris. It has come from the Andhra Pradesh High Court, wherein they had stopped the vehicle in the roadside checking. They said that you're somewhere in the fourth layer of your supply chain, the supplier is not genuine, therefore your goods are being confiscated using the power under 130, converting the proceeding the 129 to 130 itself, which cannot be done altogether. The Andhra Pradesh High Court came after the officers and said that how can you expect a person to check the genuineness of the someone who is fourth supplier in their supply chain? They have the invoices, they have their e-way bill, they can show the goods, they have paid the tax. Then how come you can say that there is an evasion of tax upon that person? The difference of him being an assessing officer and him being a roadside checker is brought forth by this Arhan Ferris judgment, and this is something you can refer to for this particular issue.
Last question, ma'am. For an issue whether tax payable by service provider shall be collectible from recipient even if it is not mentioned in the contract, courts have held that it can be collectible as the tax regime provides so, as it is passed on, will it not become right of that person to claim credit?
On an issue. This again comes to the fact that whether or not what kind of terms of contract you have. I think we are referring to the Bharat Forge judgment here, where the Supreme Court noted that it is the duty of the supplier to see and quote the correct rate, and to see what kind of it is not it is the duty of the supplier to see what is the rate of tax that will be applicable. That particular judgment was in terms of tender matters. So will it, as it is passed on, will it not become a right to claim credit? So the question here, I think, terms to it is in terms of whether or not, if a tax rate has been mentioned, or what amount of tax rate has been mentioned, even if it is incorrect, will it not become the right of the purchasing dealer to actually avail ITC on that amount? So according to me, this is also an issue that has come up. The many matters have been taken to revision also in terms of assessment, that it is the mistake of the supplier that he has not mentioned the correct rate, and the purchasing dealer should not be put at peril because of this. I'll just write the name of the judgment as well, wherein it has been held that it is the duty of the supplier to actually quote the correct return. So of course it can be brought forth that since I have taken ITC on the basis of the representation made by my supplier, and I have actually paid the tax to the supplier at the rate at the presentation made by my supplier, I should not be brought into peril because of it.
The question was little basically to say there's a presumption of tax being collected by the recipient. So once I've paid that money, whether he has paid or not, the money is collected. Isn't it become a right of the recipient to pay? That is in that context. The question
That
was
again comes to our 16(2)(c) only, that
yes, yes.
the tax must have been paid to the government.
Yeah, especially the central excise that the deeming fiction of collection is there. No, whether that will help. I think already that argument is put down in.
Yes. Yes.
Over to you. Subbu,
Yeah.
concluding remarks.
Yes, sir. I think it was a very wonderful session, which essentially gives us the entire picture of what is that which is around the provision, the judgments, covering all the aspects that we were looking for. Thank you, ma'am. I would like to hand it over to my colleague Bharat to give a formal vote of thanks.
Yeah, good evening, everyone. I am honored to be given the opportunity to present the vote of thanks today. I would like to thank Ms. Akriti Gupta for explaining the concept in such a way, extraordinary way. I like to thank our president of KSEA Sujata Madam, and our indirect tax committee mentor CA Rajesh sir, and CA Subramanya sir, chairman of indirect tax committee. I also like to acknowledge the effort of CA Sriram, member of indirect tax committee, for moderating the today's question and answer session. Finally, I would like to thank all the attendees for being a part of today's webinar. Before I conclude, I would like to bring to the notice of the attendees that KSEA has planned for many other sessions for the future, and all such details are available on our portal www.ksea.com. Participants shall be able to refer today's presentation at the KSEA website for their future reference. I would like to thank everyone once again for making today's webinar a success. Thank you.
Thanks, Bharat. Thanks.